This is not financial advice. I'm recording my thoughts about Tesla stock. Recently, Tesla released their Q1 2023 results and they were mediocre. And a lot of people are worried about their falling margins. When the stock fell to $167, I added to my position. And I'm going to discuss the reasons why I added to my position in this video. First, I'll talk about the price cuts, then I'll discuss about the Q1 2023 results, and finally, I'm going to show an evaluation with some conservative metrics to show why I am still buying at $167. Tesla cut their prices of the models from anywhere between $9,000 to about $20,000. Not long ago, Tesla Model 3 was selling at about $46,000, and recently Tesla reduced its price to $39,000, and if you apply the federal credit of $3,750, you can buy a Model 3 now for $35,000. Same goes with Model Y. Model Y is a more popular vehicle, as we all know. Currently, you can get it for $46,000 and you can apply the federal credit on top of that. So it is obvious that Tesla cut their prices because there is a demand problem. And in addition, we are in a high interest rate environment where if you buy a car, you have to pay up to 6% interest. So not many people are buying new cars. So to stimulate demand, Tesla had to cut prices. During the earnings call, Elon Musk said that he would rather buy more cars with low margin than sell less cars with high margin. So he's thinking that in future, as there are more owners of Tesla, he can upsell some of the products like FSD. But as you know, I'm not very optimistic about FSD yet. But once the interest rates go down, I'm confident that Tesla will raise prices again, and that's going to help the gross margin. Let's go over the Q1 2023 results. The total revenues, as I highlighted in yellow, grew by about 24% year on year. And out of that, if you look into the red arrows, that gives the individual revenue growth. The automotive revenue only increased by 18%, and part of that is due to the price cuts. But the energy generation and storage revenue, while not too significant when compared to the automotive revenues, increased by triple digits. Services and other revenue is a high margin revenue, and that only grew by about 44%, which is still healthy. The gross margin fell significantly. It's only 19.3%, and a year ago it was at 29%. So that hurt the Tesla stock significantly. The operating margin fell to 11% because of these price cuts. Earlier it was in the teens. So that's a huge drop. And when I look into the net income, it's about $2.5 billion, and the EPS is 0.73, which puts a P of Tesla in about 60 range, which is expensive for a car company. Tesla currently have about $22 billion of cash, and that's good to build about 2 to 3 gigafactories, so that's a good amount. If you look into the total production, they have 440,000, which is a 44% increase year on year, but they only could deliver 422,875 cars. So there is a gap here, so that goes into the inventory. There is acceleration in the energy business, as you can see on the screen. There is 40% increase in the solar deployed, and the storage deployed increased by 360%, and the supercharger stations increased by 33%. The annual installed capacity is about 2 million cars, Model S3, Y, and X. One positive thing is they're committed to the 50% CAGR in the number of cars, so they said they can get to 1.8 million cars for the year. Now let's look at a hypothetical evaluation of Tesla stock in 2027. In 2022, they made about $81 billion of revenue, and I put the estimated growth rate as 30%. Tesla will start generating revenue from Cybertruck as early as next year, and their energy business is also growing significantly. In addition, I'm confident that Tesla is going to come up with their next generation platform, or the $25,000 vehicle, by 2025, and it seems that they can produce that from the Mexico Gigafactory. So that's also going to add to the revenue streams. So when you have multiple revenue streams that are going to add more revenue, I can assume 30% or more. 30% in my opinion is conservative. So I'm going to assume a conservative number with which 2027 revenue would be about $300 billion. With respect to the net profit margin, I'm assuming 15%, which I think is conservative. I understand that recently they made less than 11% net profit margin, but that is in a very tough macroeconomic condition. Once the macroeconomic conditions get better, the margin has to get better. And also the Gigafactory in Mexico should have lower operating costs, and they're very close to the US. So that should also help with the gross margin. So with 15%, they can make about $45 billion of net income in 2027. I'm going to assume three different multiples, 20, 22.5, and 25. Personally, I think they will get a better multiple, but I'm being conservative here. So if I assume a multiple of 20, the stock price would be about $260. If I go to the higher end, multiple of 25, they will get to $325. So I'm looking at 56% gain to about 95% gain if I buy the stock at $167. In conclusion, I do not make any decision to buy or sell a stock based on one quarter results. We're in a very tough economic environment, and also there is demand issue because Tesla sells expensive cars, and things should get better in the coming years, and Tesla is well positioned to get advantage of those better conditions, and therefore I feel there is a good risk reward at $167. Even at $200, I think there is a better risk reward. So because of this, I added to my position at $167. Thank you so much for watching. Let me know your thoughts in the comments.